Hello, my guys. Hello, how is you? All right. It's a new day. Actually, today has been good and much better. Um, Today I'm gonna share with you about candlestick patterns. Those guys who have been requesting about candlestick patterns, I produce them. And for those who are beginning, maybe to study about forex and whatever, the best thing you should know that you must study each and every day. So this is what I use actually for my preview and also for my preparation for my trades. www.tradingview.com. Then we must search the currencies that maybe you want to trade. Well, I want to teach you about currencies, the pairs. Okay, the pairs are Euro USD. So Euro is the base currency and USD is the quote currency. So in the Euro currency, they are maybe buying or selling USD. So let's go to the Euro USD and find some good example about mostly about reversal patterns, candlestick patterns. Yeah, that is it. Let it road. Okay. So this is Euro USD. For the Euro USD is mostly a major currency. For the expert, they say that in the trading market, it has the most movement, a lot of movement and what have you. So there was something that I was doing there. So let me clear first, so that probably you can have a very good preview. So let us stick to the main business of today. The main business of today, we want to identify some candlestick patterns, that help us to have reversals. Like maybe if you want to buy, let's come to this position. There's this candlestick here. Well, when you come here, then you encircle it, that candlestick. Well, this candlestick, the formation of that candlestick is that this red one is the sellers. The sellers were in the market, but the blue one is the buyers. So when the sellers were in the market, the blue ones, the buyers, interfered with the market such that they supplied the sellers, and you can notice that the buyers candlestick is larger than the smaller candlestick. So first of all, we come there and then we call out. This candlestick is called the name of that candlestick is called engulfing pattern. Bullish engulfing pattern. Bulls are the buyers. So the bullish candlestick pattern always forms when the market is making a reversal. You can see that the market was selling properly from this zone, probably from this zone it was selling very properly, but this candlestick formation led to the reversal of the market. So the best thing, the market have reversed, and you can see all of that. And then after that, you can see then there is a certain candlestick that formed. Let me see, let me call out. Okay, I can use an arrow. This candlestick, that candlestick is called inverted hammer. Inverted hammer is when the market is showing that you can see the shadow part. The shadow part is larger than the body. The body is small, but the shadow forms on the lower part. That is showing that there is a lot of buying pressure. The buying pressure, the buyers are really likely to get into the market. And as you can see, the market move on well. Okay, you can see this. There was a very great movement on that. Then the buyers they come in the market, and well, the trade went on well, and you can see that after reversal we can have some buy. We can buy our trade, we can put our trade. First of all, you have to wait for the retesting. The buyers, this for the bullish engulfing pattern, you have to wait for the sellers to retest, then you put your buys. So assuming that our buys are on this position horizontally, maybe you can put there, we put our buys there. That is our smart entries. You must have smart entries when you deal with the market. So we identify an order block which is near. The order block near is this one. Maybe you can use this one, the top part there, you can use it there. That is our TP, that is our take profits, and we want to see whether our market can hit that position. Okay, so we can use a larger time frame. We can use maybe 1 hour time frame. Okay, 1 hour time frame. Let me see. Okay, yes, here it is. 1 hour time frame. We want to get this profit, assuming our trade in the morning formed this engulfing pattern. So we want to measure how many pips that we can get from that zone. Okay, pips is the PIP, that is point in percentage. Let me see. Okay, let us see how many pips, guys. Well, you can see. Okay, let me see. Let me produce it properly. Let me produce it properly. Let me produce it properly so that you can see. Yes, that is 92.5 pips. That is a very good profits. So you come here and then you put your long position. Remember, these are our entries. Then yes, then you put there. Okay, you are ready to go. Okay, then you can see. Yes, that is you are setting up your targets so that you can have a very good profit, and then your stop loss should be on the lower part. Of the loss. Yes, so your risk to reward is 10.57. that is 10 risk. You are risking 10 to get 57. That is a very good risk to management. Well, so that is all about buying, and also you can see it extended very well, guys. You can make even $1,000 per day. So we will not go far. We will choose another part. Then there is another candlestick here I have to teach you. You go to 15 minutes time frame. Maybe you can choose maybe 15 minutes. Then you do that so that you can get. You have to analyze using small time frame so that you can get those pips. Well, we have to use which candlestick are forming. You can use an example as this one. Yes, this candlestick. You unclose it. I have to do very fast because of time. Yes, so that is it. Yes, so that is the candlestick. Those candlestick. Okay, that candlestick is called Harami. So you go to the text part. Okay, you can use the text part. You can text here. That is the Harami. Harami is called that way. Yes, those are the Vaso patterns. They are very good there. Harami. Then you have to make sure that Harami is, you check on this candlestick. I have to show you this candlestick formation here. The candlestick that formed, so that you can learn. That candlestick is mostly likely that the buyers one in the market, the blue one, the green one, but the sellers come in the market, they supply the sellers, that you can see the buy candlestick is larger than the smaller candlestick, and then the following candlestick is larger one. So that is an indication that the market might reverse, and this candlestick pattern that formed here is called Harami. Then we have to find out the entries, so that we enter the entries, then we download this money. You have to download it. The money is the market, so you have to download. Your work is just downloading and downloading and downloading. So you can see you have to wait for the reversal. You have to wait for the reversal so that it comes, and then we test that zone. This is the point that it came to retest. So these are our entries. So we have to go to a larger time frame, maybe 1 hour, then we check out what is happening to the market. So maybe our zone is there. You can see our take profits is just right tree here. Then we see how many pips we can get. We use this measurement to get how many pips we can get from that zone. So it's almost 86 pips. So it's 6 pips plus the other pips. You can get even 100 pips per day. And you get this short position. You put your entries very correctly. Okay, and then you put your yes, like that. So your stop loss should be at least 20 pips from the entries. Okay, maybe 1 point something there. Okay, the previous loss is this one. The previous loss is this one, the mark here. This is where you put your stop loss, so that to avoid making mistakes. That is where you put your stop loss. So you can see the Harami is mostly used in the reversal. So if you can use only candlestick patterns, you can get that. So let me try to get even another. Okay, for those two. So today we have run about engulfing patterns, bullish engulfing pattern for the buys, and the other one is Harami for reversal. So thank you so much. Subscribe to my channel to get more and more content from me. Is your Franco FX. Mambo imechemuka.